I'm Mark Gagan and you're listening to the Voice of Insurance podcast, produced in association with Advantage Go. Release your underwriters to underwrite with Advantage Go's underwriting platform. Today's guest is a rare breed of broker looking to build a sophisticated new intermediary operating at the higher end of the market. In the past 2 years, the business he leads has gone from a standing start to handling around $1.6 billion in premiums. Andrew Matson and Augment Risk have done this by being very targeted and very progressive, breaking insurance and reinsurance down to its core element, capital. At a fundamental level, insurance is a tool for capital protection and capital management. If designed and executed well, this is a tool that produces better outcomes for clients, and these benefits are ultimately measured in improved return on equity. Of course, what I've just described is about as far removed from the traditional broker model as it is possible to be. This model might not be for everyone, but that is beside the point. Augment is already demonstrating that there is an eager community of sophisticated global buyers keen to discover what a holistic, client and capital-focused broker might be able to do for them. And that's what makes this encounter so interesting. Andrew has a singular vision for what he wants to achieve, and after this podcast, you'll be in on the act too. But we don't just talk about Augment's plans. Legacy, parametric insurance, the future of insurance securitization, and the long-term effects of the digitization of the insurance value chain are all examined in depth. Andrew is ultra-smart and highly passionate, and his ambition sears through this episode. For anyone disillusioned with siloed, product-focused and constrained broking, here's someone with a genuinely attractive and genuinely original proposition to put to you. Enjoy the podcast.
Andrew, welcome to Voice of Insurance.
Mark, good to see you. Feels a long time coming. Thank you for having me.
Not that long. Well, when you're building a new business, I think sometimes it takes time to work out how to tell the story. You should know. So tell us all about it. What's the vision for this business?
Oh, thank you. 2022 was the start of an idea where the world needed a new broker which presented and acted differently. And so we built the framework of the firm around two principal tenets. One of them is a client rather than a class of business approach to transactions. And the other one was, how do we build client solutions which create and preserve value? So it was much further away from the traditional model of selling products in boxes and geographies at prices, and more, how do we help clients take a more enterprise view to build solutions that create value?
When you meet a new customer, you want to do all of their insurance, or their risk transfer even.
It's a good question, and we don't set out to think about it in that way. More, the first principle for any client is they need to start by thinking about capital, so be it risk-based capital, Solvency II, rating agencies or regulators. They start by working out what their capital is, and that equation at its fundamental is an assets over liability conversation. It doesn't at any point say you need to buy Armageddon over Oblivion in a product line from another broker. So we like to start and put capital at the beginning of the conversation, and then the solutions follow from there.
So what sort of level does that conversation have to be then when you first talk to them?
I think we have our greatest success when talking to people either in or closest to the C-suite. So I guess we're disrupting to some degree the traditional procurement process of we have these list of things that we're going to buy or we need to buy. And we take it sort of a step back to say, how can we build a transaction for you that differentiates you against your peer group? I suppose in a way, if every single client is buying the same products from the same small number of brokers, it shouldn't be a great surprise to any of us that there is an average outcome and, those clustered ROEs we see. For insurers, what we set about doing is how do we create great outcomes which differentiate our customers against their peer group? And that could be through growth, improved ROE or some other metric.
It sounds like that customer is quite large. Is that right? Am I thinking right when I'm listening to you?
Transactions invariably are, because if we're representing a client in order to build scale, we would say, well, let's look at a broader cross-section of your business. We would look to create a transaction which has greater relevance. If we were competing on a product level and we're sort of representing a $10 million, $5 million MGA, we're the same as everybody else. If we go and talk to a client that has got great capital providers, great management team, great experience, great results, and we're able to engineer a transaction with greater relevance, we're going to capture the imagination of the CEOs of the reinsurance companies, which is really, really quite important. And if I may, I'd say that the reason it's important is because If you look at reinsurer ROEs over the previous years, there's been substantial decline. There's been a reduction in ceded margin or profitability. There's been an increase in volatility. So from a reinsurer, the opportunity to partner with high quality ceding companies on a diversified basis with a thought process more aligned to solvency and risk-based capital, you've got to imagine that's a far better outcome than arguing about the price and having your distribution narrowed to 3 or 4 brokers.
So when you were thinking about setting up Augment, you think there is a better way of doing this? Is that the driver for it?
Yeah, absolutely. I mean, if you look over the last 40 years at the way analytics has driven rating agency and regulation, and you look at how important it is to a balance sheet business for our clients, it seemed odd, I suppose, in a way that you would work out your capital as a client and work out your capital as a carrier based on the diversification of what you do. And then you go to the traditional intermediary model, which sells you a product in a box at a price. And I think it's recognized more broadly. You occasionally hear some of the other intermediary companies now talk about it's a conversation with the CFO. We'd like to have broader, more enterprise conversations. And we just thought it was relatively obvious, and we've met great reception since we've launched, in terms of size and scale, which I think shows true that there was a client base looking to do things different and sort of achieve profound outcomes. And perhaps as important, maybe more importantly, the reinsurers that work in those traditional models, just as a cross-section of capital, they've supported these transactions we've put together. So you'd imagine, actually the Augment Risk value proposition has been well received on both sides.
Where's that initial client base that you've been able to find? Has it come from a particular sector or geography or anything, or is it far more diversified than that?
So as we talk today, the firm's been trading for a couple of years. I've been there for a year. We place into the market annually about $1.6 billion of premium now. Perhaps 2/3 of that is prospective reinsurance, structured reinsurance. Maybe 20% of that is legacy transactions. But with a slightly different approach to legacy, we're not looking for toxic liabilities that can only get worse. Would you like to buy this? We were thinking a little differently in terms of how can we build portfolio structures in the retrospective market that create greater scale, and then they annually renew, because the value impact of that is so much more impactful. And then the balance, ILS, much bit of a casualty bias, and the very in vogue parametric. We really have hit the ground running there, and we've been the benefactor of some great people in the team and market circumstance, which is driving that area.
Actually, I had the CEO of Premier on the show talking about the sort of evolution of legacy, and it seemed very interesting. This idea of almost partnership legacy model to say, I'm a carrier and I'm going to be looking to cut off everything after year 6, almost like the Lloyd's model, sort of, like the reinsurance to close that you obviously reinsure yourself, but this might be if the reinsurance to close was actually a third party that you partner with regularly, and you have almost this understanding, this memorandum of understanding that you might not do it every single year, but they would probably have a look at it every year to see if it was something that would be efficient. Was I hearing it right when you were saying that almost that not permanent, but but something that's looking like a partnership every year?
Kickstart your 2025 by attending Tintech London Market and supercharge your digital transformation and operational efficiency.
Tintech London Market allows you to explore the latest developments, innovations, and use cases for technology, Gen AI, and analytics in the London market.
And it's not just about the tech, it's about people, process, and technology.
You'll discover insights on developing successful change, building a high-performance culture, and successful implementation of emerging technology.
Join thought leaders and industry experts at the #1 technology strategy and innovation event for the London market.
Search Tintech London Market to discover the full agenda and speaker lineup.
It is. Thinking about those markets in the legacy space, they're always looking for good distribution. They want to grow their business. And if you can build a partnership, again, with the management team of strong, well-run companies, and you can build those portfolios and partnerships, you're, rather than aggressively pricing the product and going through that traditional process, you're building a partnership to someone where the client receives the ongoing benefits of capital relief and finality. The soft issues, they focus on their ongoing business going forward. They've obviously got a more capital-light balance sheet at that point, which there's value implications to that as well. And so I think those partnerships are pretty infectious in all of what we do. And as I described, we built the firm around reinsurance and retrospective and ILS and MGA and parametric. The legacy, the retrospective space is so much better partnered with a prospective product. If you're looking at a legacy solution to take away some exposure, which has given you an inclement BCAR score, to really get the capital benefit, you then need to think prospective solution to really maximize the benefit. And that's where we structured our firm, not around the geography you live in, the product that you sell, or this sort of box within a box within a box. We wanted really creative, talented people that were able to craft those solutions together so that those clients, imagine a world, put the legacy and the prospective solution together, optimum capital efficiency, but most clients can't find a broker that's built to deliver it in that way. And that's what we set to solve.
It's almost like, yes, there's an ecosystem in most industries, aren't there, where of almost creating an ecosystem where, an insurer or reinsurer is taking the first 5 years and saying, well, I've extracted, I think, 80% of the value out of this thing in this 5 years. And now I'm going to give it to someone else for the year 6, 7, 8, 9, 10 until it's finally done, because they can do that final 20% of value in a more efficient way than I can, because they're specialists. And sort of, the classic sort of, Adam Smith way of dividing the labor up into the people who are the best at doing each job. And I suppose ultimately, because of that, you can make it more efficient for everybody and better value for the ultimate customer.
I think so. I mean, at its heart, scale, as you package these things up together, scale really comes into play as well.
Yeah. And how many staff have you got?
In the last year and a half, we've grown with 47 people, as I talked to you today.
And what's the scale of your ambition? And is it sort of, it's just be as big as it ever needs to be?
Our core offering, we've really met a warm reception. As I said, I talk about that north of $1.5 billion of premium. We don't have egos at Augment Risk. It's proof of concept. And that was a really strong proof of concept that there's a group of people out there that really are looking for what we're building. And so we set about, how do we find that best talent, perhaps tired of the current broking model, that are looking for a performance-orientated, client success-based firm. But currently, there's a small number of brokers, according to Dowling, that command a huge amount of premium revenue into the world. And there's been huge consolidation as well in the market, as we all know, and that's led to a lack of choice on all fronts, actually. It's a lack of choice for clients to choose who to represent them. It's a lack of choice for reinsurers and capital markets to choose where to get their premium. And really importantly and interestingly, a lack of choice for talented people to choose where they want to go to work. And so we've grown rapidly. So we've, as I say, at 46, 47 people, we've grown really rapidly in the US. I think we've found there's a core market of clients that really do benefit from what we provide. And so whilst we started within the UK and we've, as I say, welcome to our office, we've built an office footprint here. We've equally built out in New York and in Miami, where we found that there's concentrations of good people. But then from Minneapolis through to Charleston, through to Seattle, we've still stuck to our knitting and continue to do so. Let's find the right people, the best people for the job, and be agnostic as to where they put their feet when they get out of bed in the morning.
Just find the right people. It doesn't really matter where they are. As we know, we all use the internet and we can all get on an aeroplane if we need to meet someone, and that's what we all do anyway, I presume. So as long as they've got a good airport.
Absolutely. I see too many of those, but absolutely.
You start a business and you never quite know you. This is the slightly sort of jumping off a cliff moment. You think, well, hopefully, I think it's all going to work out. So has it gone to plan, do you think? Or nothing ever goes to plan at that point, but how's it gone? Has it gone better than you thought it was going to be?
It has. In fact, it's my anniversary start date yesterday, and you sort of just have a little bit of a moment and pinch yourself. So absolutely it has. We have, as we touched on, received fantastic client response. That $1.5 billion, $1.6 billion of premium really is a statement to that. We are having to recruit more quickly than we thought we would in order to service the leads from clients that we're getting at the moment. And so we've moved, I think, away from the infancy stage and going through and beyond the toddling stage into we've got some fairly serious clients now, and we are putting together some very sophisticated transactions, and we need to keep looking for and finding good people.
And those staff, it sound like they're not the average mold. Are they more technical? Have you got a lot more people who are very good with models and things like that?
We do. We create a very different environment. So rather than the more traditional quarterly reporting environment, which is nothing wrong with, I spent a huge amount of time there and enjoyed it very much. We've created, I think, a haven for creative minds, like at the heart of everything that we do for people. And it's an awful lot, mostly in terms of freedom. As I say, we don't mind where people get out of bed in the morning. We work across multiple geographies and all sorts of transactions. So it didn't make sense for us to have that traditional work environment that you expect in so many places. So we create an environment where people treat their workplace like they treat their home. It's, we think, quite special to them. It's special to me, and it's very important to us that we sort of create that feeling. At the work level, freedom. So thinking differently is one thing. If we go back to our earlier part of our conversation, if every client is buying the same product from the same small group of brokers, from the same small group of reinsurers and capital providers, save cost of capital and margin of profit, everyone is doing the same thing. And so that traditional thinking, we work to make the path of most resistance. So when a client sits down and says, I need to do something that's profoundly different, I need to outstrip my peer group, there's an opportunity to write $300 million of premium next year, which is all well and good until you've got to find the capital to write it. And if that's difficult to, we set out to achieve those goals. We set to find 1, 3, 5 year objectives, and we get those creative people coming up with ideas to weave instruments together to help that creative person achieve their goals.
Go and get the capital as well.
Absolutely. And so all of our people are frontline. We hire top talent, and we encourage the client communication so everyone knows what the common goal is. And freedom. So thinking differently, it's an innovative, performance-based environment, thinking differently with an inordinate amount of freedom.
In terms of as you're projecting outwards into the market, I suppose doing a podcast is part of that kind of process. How do you want that message to land? You know, if I bumped into someone in Lime Street and said, oh, you know, Andrew Matson's lot, Augment Risk, what are they all about? What would you like them to be able to, the first thing to associate you with, say, oh, they're very brainy, aren't they? Or that kind of thing. Or they're very high end, very technical.
I think a high-end boutique-based innovation culture, high standards, high client advocacy-based business, underpinned with that thinking differently creativity, that I would want people to think, I'm calling Augment Risk because I need to do something that's profoundly different at scale, that's going to drive a different outcome, and work with people that can help articulate and create that value. It's not all about an annual price.
And if they said you were a smart, joined up reinsurance and capital markets broker, is that fair? Would you unpick something and say, no, that's not quite right?
No. I think we foster an environment of cross-collaboration. We've not incentivized people in the traditional way. We've incentivized people with growth ambitions and client outcomes rather than the traditional P&L model. So it's actually hugely more exciting if you're here within the business, because if you help clients succeed, almost in a way, you don't have to worry about the success of the business because it will naturally follow.
They're always going to come back, aren't they?
Absolutely. So focus for us is client outcome, outsized solutions. It's not let's change the price by 10 times, let's go by 10%. It's let's 10 times the value. How do we start with that? And so ambitious C-suite individual CEOs, CFOs, where they're thinking, I'd like to come up with some innovative ideas to do something different. We're the people. And the alternative, go to the traditional brokers and they'll all be really impressed with the business, but they'll have to dismantle it into component parts. Here's your North American team, your European team, your P&C team, and so on and so forth. So all of the value from a client perspective is always to some degree going to be diminished into smaller pockets.
You're doing something, we're trying to do everything cross-class. I suppose, am I now guilty of thinking in that old mindset, aren't there? So it's difficult for me not to. Do you not want to rock up to a pitch for someone doing a broker tender for my property cat program this year? Presumably you don't turn up to that.
No, we don't. I mean, and then that's if somebody was to ask the question in a different way, like how are you trying to compete with the traditional broker? Like, we're not. Property cat would be an obvious place to go. But what value are we going to add because we buy the models and hire some brokers and modelers? That's not at the heart of capital. We'd far rather another broker look to place those transactions. It will always come back to capital. We'd respond to a tender if it follows those triages we spoke to. So who's the management team? What's the performance of the business? Diversification results. Could we come up with something here which is in a way probably complementary to the other broking models, because you don't not need those solutions, but at the heart of it's capital. So that's where we'd go.
So your core measure for success is, have you improved the return on capital for that client, ultimately?
Return on capital or other growth issues. So it could be fixing some inclement part of the business. It could be providing a source of capital to help them grow. It could be diversifying sets of capital as they grow, but all of it with value in mind.
Could you be on the advisory side? If you go to a client, you suddenly realize that they've got a unit that just does not fit, that messes up everything, you know, the nice pretty playing field they've got this sort of something that's messing up their diversification and everything else. Would you advise them to divest a business, for example, or to say, well, actually, you probably need to divest that and buy something else that has more of these characteristics?
I think ultimately we could end up there. As we've looked at solutions at the moment, it's been much more, let's observe the overall spread of the business and harness as much of it as we practically can to build those strategic partnerships. So to date, I would say those things have been left out, and the natural journey for those bits that are left out, we haven't to date got so involved in, but it's a natural part of the journey.
Yeah, and M&A yourselves doesn't sound like there's anything you could buy, even if you were going to buy. I mean, I'm putting words in your mouth here. Is your growth strategy mostly organic?
It is. You'd never rule out M&A, obviously. If there was some way that we could see we could find great talent and scale, we'd obviously look at it. But at the moment, we're championing a very different internal culture to the other brokers, and it can't fathom why you would want to buy talent, create an integration issue by buying it at a multiple. We want to find the really good people that see the value of coming to work here and the fun that it would be.
On that cultural side, what sort of culture do you want to build? I think you've kind of articulated it. And what's the sort of person who's most likely to come and join?
The people that would come and work at the firm, there's going to be a fundamental, I think, discontent that we see in the broking community of people that are just looking for something different. Kind of hard to find at the moment. And so our job is, we definitely present a very strong alternative to attract people that think differently. As I said earlier, I think that haven for creative minds. They don't want to be pigeonholed into boxes. They have the ability to work across geographies on multiple, multi-line, multi-discipline products with an inordinate amount of freedom to indulge their creative senses, both from maths and marketing. And so we fuel that by having, I guess, relative to other brokers, a smaller number of much larger transactions, which gives people that work here enormous power to go and talk about transactions that have great premium relevance. And then they have enough scale and diversification that you can come here and be really quite creative with it.
You mentioned about parametric insurance, something that's very much come to the fore. It's not necessarily new. Obviously, I suppose, parametric triggers, ILWs, and most ILS had some kind of parameter had to be fulfilled before you get a payout on a bond. What kind of trend are you riding there? It's interesting that it's come to the fore now, and I suppose probably on the back of some of the investment in insurtech and other things. Tell us all about it. Why, of that mythical person in Lime Street, wandering up and down Lime Street, if I asked them about Augment, they'd say, I think they do quite a lot of parametric, don't they? I think that would be correct. What sort of potential do you think it's got? I mean, it certainly seems to work at this very high end of the industry. I would say personally, it's not the sort of thing that's going to go all the way down to personal lines, is it? Because I don't think it's quite appropriate.
I think where it stands at the moment, it's best served in some of the transactions that we've been putting together. And the concept behind parametric and indeed other to-come index-based products and solutions, it's a more surgical approach to dealing with property risk. We talked earlier, what value is Augment Risk going to add by hiring cat brokers and by hiring the models and pricing commodity-based solutions? We thought, well, actually, if you have parametric as part of your balance sheet strategy as a client, you get some amazing benefits. Your cash flows are going to be quicker. So you look at the traditional property cat market, 18 months, if you're claiming $100 million and it takes a year to 18 months to get you, is that okay? Question.
Well, there always used to be a cash call element on most treaties. You get a call quite quickly.
No, of course. But with parametric, we've settled in excess of $100 million worth of claims over the last few months, and we settled them. The cash was in the bank account in less than 14 days. Certainty done, and the clients are much more able, the worrying of cash flow for some businesses, but you're buying second event covers, you have greater options. And indeed, those parametric covers inure to the benefit of more traditional solutions. Like, we're not advocating what other brokers do should go away. We're not trying to say that they're wrong, but we can augment what they do to drive better outcomes.
Yes. So ultimately, it's not something that everything's going to be parametric one day. It's just that it's better in quite a lot of circumstances.
Correct. And in terms of creating and preserving value, a lot of that is diversifying how you build your solutions. And so we're, in a way, not trying to beat the other brokers. We're sort of suggesting, well, if you have parametric where relevant as part of your balance sheet protection strategy, That diversifies you away from market fluctuation, singular counterparty risk. There is a value element to that. And that's the conversation where we say, why would you not have this as part of your balance sheet strategy? So also moving to augment risk doesn't necessarily mean throwing away everything that you've done before or the relationships you built. Quite the contrary, but they can be quite value accretive add-ons.
What do you think the limits are for it? I suppose all parametric covers, they start off being completely all risk because just there is a parameter, is it yes, no? Or by how much does the index move? And then you realize that it might have to have some exclusions. I remember there was a parametric product about hotel occupancy, which was great until the pandemic came along. But of course, we would know what the historical things would have been, terrorist outrages and goodness knows what. But it's something I've always found really fascinating. It's like, oh, this is great because it's kind of getting all the wordings. We don't really need a wording. The wording says, does this number go over 9 or not? Great. Oh, no, but now it probably needs an exclusion because we suddenly realised that not enough things had happened in the world for us to realise that this is one of the unintended things that could move that number that we hadn't thought of. Do you think we're at that stage with parametric where, we're going to find that we'll have to slap on a lot of exclusions like you do with everything?
Probably not yet. And I think the reason for that is, as demonstrated by many other brokers following into this space, there's an increasing protection cap. If you look at Florida and you look at those renewal seasons, there are clients out there that are, I guess the brokers are saying price has to come down, the market's saying the price has to go up. And so the opportunity to fill that gap around Citizens and Florida and the lack of available cover.
I suppose if they're natural perils, then the peril's the peril. I mean, ultimately, did the wind blow more than 127 miles an hour consistently for 3 minutes or whatever it was, then that is a parameter that is the peril, and flood is flood. Did the water come up to this level? You can get that because that is what you're covering specifically. You can't say all risk of flood excluding water,
That's true. We've seen other developments in parametric as well. I think when you look at the modelling and some of the previous challenges around basis risk, the triggers that we've been employing, if there's a hurricane going through Florida, it will take a measurement sort of before that point on shore and after, and we'll take the higher of whatever those numbers are as well. Basis risk has been a little bit of an issue. But going back to how you framed the original question, I think this is an area of real creativity and market demand. And for utilities, as I say, we helped a utility company that was debt leveraged, and the impact of our product wasn't so much repairing damage done, it was making sure that we preserve that company's ability not to breach debt covenants, as an example. And so, so structuring things to solve different purposes, it's not always the visual of the actual physical damage that was done.
I suppose as more knowledge is acquired more, and obviously the ability to measure gets better all the time and to understand, I suppose basis risk does tend downwards. It's never going to end up being zero. It can't be zero, but I suppose it's going to get better all the time, isn't it?
Definitely, yes. I think one of your examples you used earlier, it might be a little bit hard to insure Granny's lounge for a while.
I think you could easily stray into sort of mis-selling type situations there where, a consumer might not know the difference between having a 50 centimetre deductible and a 1 metre. Might be 1,000 years of return period.
Definitely a conversation that's better suited for professional purchasers. But as we see it, certainly in the areas of creativity with the financial engineering elements of it, as well as the traditional market seemingly struggling to catch up. And we've seen it over the last few months, the RLW market and Commons PCS data and the like. I think it's bolt on some AI developments over the next few years, and you can start to see how it could be increasingly more relevant.
If parametric is one of these secular trends that they will start slowly and it's really taking off now, what other trends are you playing into? It's AI, the technology sounds like something that will play into your strengths. As data gets more granular, better. You have more data that's of higher quality that you can analyze and you can come up with better solutions.
Definitely, yes. And our technology strategy now, we've seen previous companies go through the route of building their ultimate technology endgame at the start of their journey. We went down the route of building the distribution to understand the clients that we need to serve, and we collect an awful lot of data. So rather than the traditional broking model where you look at data points annually to place renewals, we've looked at data on a more frequent basis, because if we can bring the banking world a little closer to insurance, imagine the ease we will have convincing the ILS markets and the capital markets to engage in covers if we can value our insurance products more like securities on a more frequent basis. And so being able to triangulate portfolios, it requires articulation of the end game and the benefit of the end game to the client, but it does require, and we're just at the point now of engineering some of those solutions so we can measure what's within the portfolio at a much more granular level in greater detail.
Are you almost saying we could have an index that's tradable all the time? A bit like, the VIX in Chicago or, FTSE 100, that you could actually take a long or short position on something?
I think that would be a really interesting end game. I was more thinking that clients at Augment Risk would benefit far more than software systems that enabled them to interrogate their data at a greater granularity.
Right.
To make it far easier and quicker to get.
So were you getting closer to real time?
Yes.
Yeah, absolutely. So I was thinking real time at the other end rather than
which is probably going back to your other point, away from people, is where you can see that perhaps M&A and partnerships could accelerate our development there far more quickly.
What about one of the other secular trends that we've had is in distribution? But my theory might be that it's been probably down to technology. We've had this explosion in some of the MGAs, but supported by reinsurers. And then we've got hybrid carriers in the middle there, the capital light structures, the sort of things that I'm sure you're good at helping to optimize. What do you think's behind that? It sounds like a natural place that you could be sitting, helping source that capital for that book or that diversified book of 20, 30, 40, 50 MGAs. Sounds like a sort of place that you might be an ideal broker for. And obviously, that's been a secular trend that has attracted lots of new premium.
Honestly, I think you're right. If we track that back as 2017, 2018, as there was a...
It's been surprising how it's exploded, because it's almost like the second wave of MGAs. We were already on a wave of MGAs then, of formation, but now it's a very different story being told.
It is. I like the story of the transition to MGAs, because I guess that speaks to underwriters mostly coming out of established corporate entities wanting to build innovative data-led solutions. Most MGAs are tailored to a distribution source and expertise. Your point, providing capital to them, when you do look at rolling them up, and there's a number of businesses all over the world now doing that, you effectively build portfolios, and you start building portfolios, and you start then thinking diversification, solvency, regulatory. And so we do spend some time with businesses like that thinking, how can we think like the counterparty? So rather, I've got 10 MGAs, can we have some capacity? How can we build that key partnership to help the reinsurers and sort of the macroeconomics of their environment? We can go to them and say, here is a proven distribution source that can help you grow, and we do the work on the maths to show the diversification and the benefit of it. So we have done a lot of work there.
What about on the other side, on the capital side of things? We've had a huge amount of innovation again in Lloyd's, automatic, semi-automatic facilities, lots more consortia being formed. Do you think it's only going to go one way in terms of that lead-follow situation? How far do you think it's going to go? How many leaders are we going to have? And how quickly do you think things will be placed once terms are set? Or is that not the kind of broking you want to be doing? Is it the sort of broking you want to be setting up those kind of vehicles and being that prime analyst in the middle, helping to make this thing happen, to get that capital together with that risk provision that is probably operating in a much smarter, a more enhanced way, a more automatic way?
I'm smiling slightly. I had a little flashback to Aon days where I used to build some of those facilities, and I think they bring extraordinary value to the clients that they serve, and indeed...
Well, yes, the poster child for that, London market facility with 28.5% of parallel pre-placed capacity. Do you think we might get over 50 at some point?
I would hope so. I mean, I think if you look at it from the client perspective, because they're the people that drive the market, if you can find a faster route to high quality pricing with high quality capacity, with certainty of claims being paid, they have to be good outcomes. And so you can see those pockets of products doing that. And in order to drive those outcomes as well, the role of the broker, the role of Augment Risk as well, is drive competition in capital. And so those instruments are brilliant. If you can start bringing traditional reinsurers to globally distributed clients that they otherwise wouldn't see, that's highly beneficial to all involved. And as we think of our business, almost like Vanguard funds, we should get to the point where if we can collect data, well, what's the demographic of the risk in this bucket? What's the volatility around it? What's the expected return? And you're talking to different investors with different amounts of capital. They can really redefine client outcomes in the landscape. And I think facilities generally have done that and done that very well.
So do you think you could almost become a fund manager for some of these, or at least one of the specialists that are helping set up these funds? And when we end up with some mega Vanguard style, very low fee, sort of these 0.2%, 0.1% fee, presumably at that point, you're not going to be working on brokerage, are you? You're going to have to be on fee only at that way.
I don't want to go too far as to, only in as much as all of these things are underpinned by really high quality underwriting as well. And so there's that healthy tension between the both. You wouldn't want one to dominate the other too far because they're independent.
Well, yeah, I suppose it's self-correcting because then at that point it might get a bit dumb and it might lose a lot of money quite quickly and then rediscover the sort of wholly managed version.
I'm not going to argue with you
more
on
frictional
that.
version.
Yeah, absolutely. At the moment, I think they bring great opportunity. They bring competition, they bring scale, they bring innovative, different ideas. And for the most part, the time that they've existed and they've been sustainable, Client Treaty yesterday made that announcement of their latest developments, that they're here to stay in different forms. So innovating new ones.
Yes, it sounds like it bodes well for, let's say, the high end of the market with technology, with friction being removed, being able to get access to business and also allow those clients to get access to that high quality capital. And therefore, for a marketplace that is specialized in syndicating that, and the market that we work in, the London market, Bermuda market, global reinsurance market, seems to be in a really good place as long as we can work out the digital side of things, which I'm fairly confident about you. I feel reasonably confident that we're going to actually get there. We're frustrated we're not getting there quick enough, but we feel like we're probably going to get there now.
I'd agree. I think there's always that healthy tension with people driving different agendas, people that want change and people that don't want change. But I agree with you. You can see momentum all over the industry. You can see the learning from banking over the last 30 years. And you can see it really, globalization of risk and technology and AI. And it's actually a lot of times it's those smaller companies that build up innovative new ways of doing things and innovative new ways of thinking about it that help drive the change.
I would say, yes, the biggest cultural change of the last 30 years is that 30 years ago, probably majority of people who didn't really want to change. And I think it's now flipped the other way. It's a very large majority of people who are impatient for it to change.
And that is going back to one of your earlier questions where I'd like to think people listening, think of Augment Risk as an agent of change. If you're one of those people that Mark very well described there, it may well be that conversations with us to maybe explore some of those really good ideas that people have would be good.
In your own business, obviously, we all need capital. You've got investment from Altamont, obviously very, very high, very blue chip type investor to have. How's that relationship with them? With these things, you often ask about a time period or something, sort of how long is it for? Or, often the answer is, capital's all permanent now these days, which we always say with a certain pinch of salt. But what's that relationship like?
Quite fabulous, to be honest with you. They're a great partner. They understand insurance really well. As you may know, they have some separate interests in other insurance vehicles, which was a really great draw when you can talk to somebody that actually does understand the challenges that organically building a broking firm into a new niche. That needs certainly the strength and depth and bench strength. And as you described them so ably well, that is inordinately helpful when we're talking to our new clients and the financial security and strength that we enjoy. I mean, Altamont are fabulous for that and fabulous actually helping us with strategic introductions and other areas that we might want to think about.
They're active and they understand insurance. So they're more on the active end than the totally passive end.
So I suppose active in that they're very interested and communicative, not involved in the business day to day, but having a conversation with them, it's more of a partnership conversation and more of an ability to challenge ideas. Like I think of them quite affectionately, to be honest, but they're not involved in the day to day.
If I was them, I would be happy because you've got the traction already. So they can see that they probably will get their money back. So that's always the first most important thing, isn't it? Don't lose money.
I don't think of it quite like that because I don't look back so much as look forward. You sort of do an awful lot of things and you realise how much more you have to do in a really good way. It's not a challenge, it's an opportunity. And I would say as we explore the scope of some really creative ideas and perhaps things that we hadn't thought about at the beginning or just evolve over time, those conversations, we know that we have a partner that is able to support and help deliver on us delivering those outcomes for clients. So as we've built the stable BAU value propositions core talent management team, we turn our eyes now to some of the game changers and some of the more strategic ideas that we want to explore. And Altamont are a perfect partner for that. They understand the industry and they love opportunity and they love risk and the risk business.
Well, I think I've come to the end of all the things I wanted to ask you about, Andrew, but it's always the case. I write down 10 questions and then when we have a really interesting conversation, it always engenders about 20 new questions. So what would be your sort of things that you learned today and then you've got to wake up tomorrow have now informed you? How far do you think this business could go? It would be fair to say it would be sort of, you'd like to be the Goldman Sachs of insurance or something. Well, but not really, but not Goldman Sachs, but Augment Risk.
Maybe very much the Evercore approach to client, that boutique client solutions, capital solutions. And insurance doesn't have one of those. And so definitely can see how we would fit there. But reading a Simon Sinek book recently, and he was talking that law of innovation diffusion, you get to the 7% of adoption of a new idea and you get the cascade growth. And that going right back to the beginning, our core offering, 1.7 billion. That's really a statement to we're on the journey to that law of innovation diffusion. I think once we pass that, I think we'll gain immense scale. I look forward to him getting immense scale.
Yes, this great paradox of the very, very large boutique broker.
I see, you've got to be careful not to become the establishment and maintain that creativity. But in a way, we didn't come up with a utterly unique idea for Augment Risk. We just took the fundamentals of rating agency and regulatory capital and put it at the heart of what we do, and then built capital solutions around that, which is the natural beginning point. The reason there's resistance to that is because you have all of these extremely good broking mainstream, and even though everyone knows that it starts with risk-based capital and Solvency II, but they're all building products in boxes at prices because they're easier to scale. And so that indeed is the challenge for us, is finding really good people in those areas and getting them to come and join Augment and think a little differently about it. But I think the statistics speak for themselves. We'll keep growing.
That's why we have podcasts, Andrew, because I think it's quite difficult to distill that. I mean, you need to get your marketing people to help distill that, because that's really difficult to explain. And I'm really glad that you've given me the time that I needed to get my head around it. And now that I know what you're up to, it's fascinating. And I wish you all the best, because it sounds like you're really sort of going to embed yourself in the heart of a very important global industry if you can do all these things.
Yeah, nothing in the world can get in the way of persistence. And everyone at Augment Risk is persistent. It's fun. But no, I really appreciate you inviting me onto the show.
Thank you so much for your time.
Thank you very much for having me. It's been a pleasure.
Well, I hope you enjoyed today's episode. If you did, don't forget to subscribe or leave a like or a review or recommendation on whatever podcast platform you used to access this programme. These really help get the word out. Before we go, just a quick reminder that advertising slots are available here and in other places in the Voice of Insurance podcasts. Podcasting is the fastest growing medium and attracts a high quality audience of key decision makers. It's also an intimate medium where you, the listener, are right in the room with me and the interview subjects. Needless to say, that means it's a great way of getting your message out directly to an audience, because you know you've got their full attention. It's also very cost effective. So get in touch with Mark at thevoiceofinsurance.com to find out how you could be speaking directly to the industry.
The Voice of Insurance is produced in association with Advantage Go. Release your underwriters to underwrite with Advantage Go's underwriting platform.
Voice of Insurance is produced by me, Mark Gagan. Music was written by Anna Gagan and produced by Carlos Gagan. Check out more podcasts and written comment pieces at www.thevoiceofinsurance.com.